Stop. What up? What up?
Hey Ross, good evening. Welcome
How
in.
goes it? How goes it?
Pretty good. How about yourself?
Pretty good, man.
Yeah, good day for you.
Yeah, I broke even on the day. Yeah.
Hey, that's a great day to have that kind of performance, that's for sure, based on just how everything else turned out.
Well, I was actually trading shares in Open Door,
Oh,
and
really?
I saw it was looking weak at one point. If you go to like the 5 minute, 15-minute chart for today,
You were the one who told me about this last week, right?
yeah,
Or was that another one? Yeah, okay.
yeah. If you switch to the 15, so see down there where it consolidated.
hmm
So I ran a fib from the bottom of the open to that
hmm
top before it started, and it was hitting the 68.1 fib, almost like right on the nose.
Oops.
And then it just kind of like I saw some flow, and I don't know. I should have been more patient, but I ended up closing the trade at like $10 gain, and then it ended up fucking running, and I had 200 shares.
Well, it happens to the best of
Right
us.
before it ran up, man, I closed that trade.
Well, why'd you close it?
I had to kind of go take care of my son too. I guess I could have left a trailing stop or something, but I kind
Yeah.
of don't like doing that sometimes.
No,
That's all right.
that makes things a little
I
more
didn't lose
difficult.
money, so that's all I care about.
That's true. No, that makes things a little more difficult though. I can understand that.
My son's 3, so it's like, you know,
Yeah.
hard to
You
trade
got
sometimes, but
you
that's
got to
okay.
do what you got to do, dude. I get it.
Yeah.
That makes sense.
But my analysis was correct and everything, so that's, at least there's that. I
Yeah, well,
had the
there's
right idea.
something to be learned there, right? Maybe next time you can just toss on, maybe not even a trailing stop, just something
I
protective,
could have just put a stop at like break even and walked away, and then I would have came back and been like, "Oh, nice, look at that."
right? Especially when it's being shares too. Like if you were trading some kind of options on it, yeah, maybe things get a little bit more exciting. But if it's just something simple, don't be too afraid of it, right? Anyway, we're gonna get started here in just a couple minutes. Just waiting for a few, probably 1 or 2 more minutes, and then we'll get started. But is there any questions, anything else to cover before we get started? Hmm. Cool. This one will probably be on the shorter side just because there's only so much to be said about support and resistance, even in a more intermediate format. But we'll see maybe where everybody's questions take me if they take me in a direction that maybe I wasn't specifically mentally prepared for. But yeah, should be a fun one regardless.
Man, that Google news really came out of nowhere.
Yeah, that was a wild one, huh? Finally
Yeah.
got to hear that they weren't going to have to divest Chrome. Probably should even add that to the chart here. That's going to be coming soon.
Yeah, that's something else that got me because you know how you can trade contracts for like 15 more minutes on SPY after close.
Yep.
So I had a SPY call end of day, a risky play. I was doing one of them flip specials, anyways. But anyways, it cost me like $20. I closed it at 15, so I took a $5 L, and then it did that.
Yeah,
I
that was
had the
probably
six. I had the 640 also, the 640 call, or the 5 some stupid. What is that? Uh, could have been the
well, that was the
640.
cues. Yeah.
Yeah, the 640.
Yeah, that probably paid pretty disgustingly. What are you gonna do though? All right, I think it's just about time to get going. So I'm gonna send out one more message letting everybody know we're gonna get started and we'll get into it. So give me a second to type this out. Cool. All right. Well, we'll wait as people kind of trickle in, or we'll start, I should say, as people kind of trickle in. But kind of like I mentioned a little bit ago, everybody, tonight's going to be on support and resistance, and even in kind of an intermediate format. I figured I had to cover it when I was first kind of planning out the lecture series, but even planning for tonight, I was like, yeah, maybe we could have skipped this topic. I don't know. Um, yeah, I guess just being upfront, support and resistance. I thought I was going to maybe find a little bit more intermediate things to talk about, but there really isn't too much to it. So we'll see how in depth we get tonight. I think I'll let your questions drive a lot of the content that we end up covering. But I wanted to start tonight with a bit more of a detailed recap of what we covered last week, because I think last week's lecture was probably one of the more important topics that we've brought up so far in this course series. And I want to really continue to drive those points home. So with that, let's get right into it. Again, we're in lecture 6 here, so we're at the halfway point. And from here on forward, it's definitely going to be some really fun lectures. A lot of things that we haven't seen in a while. So I'm really looking forward to the back half of this course series. And tonight's going to be that last stepping stone to get us prepared. So we always recap the goals at the beginning of the lecture. I assume at this point, the majority of you have been to one of these intermediate course series lectures, but if not, just a quick reminder of the goals. So again, number one is always going to be to improve your skills. Specifically though, this course series is going to be focused on traders who already have a baseline understanding of technical analysis and financial markets and that sort of thing. So it's not going to be as focused on those who don't have that initial knowledge. And then secondly, and arguably most importantly, we're going to teach you all how to apply the techniques that we discuss in all of these lectures. And I say this probably every class, and I'm going to continue to say it. It is incredibly important for all of you to take the lessons that we talk about in these classes and practice applying them. When you're prepping for the market and after hours in your own trading, because they're really not going to stick with you until you incorporate them in your daily routine and your preparation and your charting and the trades that you take. It's one thing to just talk about them and internalize the discussions that we're having, but without that practice, without that repetition, none of this is really going to remain in your mind, and it's probably just going to be forgotten. So really important to be practicing everything that we talk about in these classes. So with that, like I mentioned, I wanted to start with a bit more of an in-depth recap of our last class. And last class, we talked a lot about patterns. And we started with this specific example where we said, what do you see in this chart? And a lot of people mentioned maybe there's some kind of trend line or some kind of flag here, maybe some multiple or double bottom, whatever you want to call there, some kind of double top potentially, another double bottom, maybe some other sort of flag. And these are all examples of more typical patterns, right? There's nothing really too crazy or shocking in any of these examples. All of these are those sorts of patterns that you would be pretty familiar with as a beginner trader. And continuing on in this specific example, there's more similar patterns, right? You have what might be a double top, maybe some kind of bear flag, some sort of cup and handle potentially here, maybe another double top or small cup or bull flag or breakout, whatever you want to call it. And all of these are examples of just very basic textbook patterns. And the point that I drove home at the beginning of the last lecture was that it's not going to make you a better trader if you memorize all these patterns and apply them, right? It doesn't matter if you know all these, because anybody can really do that. It doesn't take much to get to a point where you have all these patterns understood. It really comes down to number one, how you're actually applying them, and number two, understanding the fact that a lot of the market isn't going to look like how it does in maybe a textbook, right? You're not going to see a perfect double bottom every time. You're not going to see a perfect bull flag or bear flag every single time it arrives. So it is up to the trader's interpretation a little bit when identifying patterns in the first place. So if you wanted a cheat sheet that maybe you could take home with you so that you have a good understanding of just the basic patterns for the future, this is certainly a good reference for that. But what we focused on most importantly in our prior lecture was patterns related to the current trend a given name is in. And this is going to now be the third or maybe fourth time we've talked about this graphic in a significant amount of detail. And I truly do feel it's an incredibly powerful thing to be mindful of. Um, and this is going to be one that's basically directly from Al Brooks, legendary day trader. You've certainly heard about him before if you've been to any of mine or Dirty Rivers lectures. And this graphic shows I'll say three examples of an uptrend and one example of a trading range. And people like Rob's who have been in the last multiple lectures are probably really tired of hearing this. And hopefully he feels like he's at a point where he can almost teach this himself. So on the left, we have what would be a strong uptrend, right? Also known as a breakout. This is going to be a trend where bulls are looking to buy every single bar. And you could tell typically when there's a breakout, there's also very commonly very high or above average volume. And this is a reflection of the fact that bulls are purchasing every single bar. They are taking every possible opportunity to buy the market. They're buying on limits, they're buying on stop limits above bars no matter what, bulls are buying. And what comes with that is that there's not many short opportunities. In this case, there isn't really a single short opportunity. And looking at the breakout example on the far left of the chart, it's pretty evident that there wasn't really a single short trade that paid, maybe one if you time the top of this bar. But all things considered, there's really no chance for bears to make money during a breakout that looks like the image on the left. And the reason that that's important is that results in a very high probability of continued upside, right? If there's not much money to be made selling, well, there's only really one direction for the market to continue moving higher if it already has that momentum and volume backing that breakout. The problem with this is if there's a high probability of something continuing in a single direction, well, there's got to be some trade-off. And that trade-off is where our stop should be defined. So in a breakout-like environment, it's really important to understand that, again, probabilities are very high that the market continues moving higher. However, realistically, our stop should be near the lows, right? Because this breakout wouldn't really be failed until it reverses back below that initial breakout spot. And we're just assuming in this example, it's below the low of this bar. Maybe that assumption isn't always valid. We reviewed a couple examples and we'll pull those up in just a little bit that show that that's not always the case. So that's a breakout. And as we move to the right on this graphic, where we start to get a little bit more, I'll say weekend action, the first one that we get is a tight bull channel. And we can see in terms of strength and in terms of upwards momentum, most bars still remain as buying opportunities, and there still is very few or minimal short opportunities. In this case, there's a couple more buying opportunities for bulls, right? In this case of a breakout, really you could only buy I guess, a new high. Where in a tight bull channel, bulls have the opportunity now to buy maybe 1 to 2 bar pullbacks. You can buy breaks to new highs. You can buy failed reversals, right? When we see maybe what could be a reversal bar and a break to a new high above that bar, that's a pretty solid opportunity for a bull to take an entry. And let's say, for example, this tight bull channel is on the 5-minute. If we looked at that same price action on something like the 15-minute or the 30-minute, it's just going to look like a breakout because all those bars are going to mesh together. And all we're going to see is this sort of strong upwardly, I don't even know what I was trying to say there. Anyway, strong upside price action. Again, continuing to move to the right to this example, we're going to have what is called a broad bull channel. And this is where we start to see a little bit more opportunity for bears to begin making money in the market, right? We can see when there's new highs, now we're starting to see those more extended pullbacks where bears definitely do have an opportunity to make money, right? In this specific example, you have a breakout above this prior high, and we get the break back below that prior high, which could very easily be a short trade, right? You could sell that bar as we close back below that prior high because that's a failed breakout. So this is where we see those pullbacks off new highs. We're seeing those sellers step into new highs. So as a result, if we're looking to long in an environment such as this, we're going to want to be getting involved in this sort of trade at the lows, right? And one actually decent example of a name like this is Oklo, at least on the daily. And it's kind of how this has been trading, right? At least over the last couple of weeks here. And let's just clean this up. A couple of months, really. If we take a look at how Oklo has been performing over the last few months, it had this pretty strong initial breakout phase. You could probably call this some kind of tight bull channel, but ever since then, we've been getting some more extended pullbacks. And you'll notice in general, new highs are once again being sold. So if we mark out what our new highs would be, a break above here, and a break above here, every single one of these new highs here and here is getting sold into, right? And if we compare this name to something like BE, Bloom Energy, it's absolutely not the same situation, right? If you look at a name like Bloom Energy, it would have been making new highs above 44.82 and also right around this 28.50. And if we take a look at this name, the character is completely different, right? And it's important for us to recognize that. This name broke above prior highs with the bull bar closing near its high on elevated volume. And then from there, it basically never looked back, right? This is much closer to a tight bull channel where we see maybe 1, 2, 3 bar pullbacks and price continuing to move higher. Today was an example of that second bar pullback, right? We got a breakout into new highs, pullback into the EMAs, which is got bought so far. So it's important to differentiate the two, right? Because they're definitely not the same. Again, Oklo is a name where you really don't want to be buying these new highs, right? Every single one of these new highs gets sold. We get this consolidation period and ultimately makes new highs again. But I mean, just the difference in buying, maybe somewhere around here, let's just go this would have been, let's say, a 20% gain from high to high. If you were able to catch an entry somewhere near the lows, and we could even go more conservatively after we broke back above those lows, all of a sudden you're up basically double just by taking a bit more of a conservative entry and recognizing the environment that you're in. And that can be the true power of being able to recognize some of these patterns that you wouldn't find so neatly defined in every beginner's trader course or video or that sort of thing, right? These are things that are a bit more nuanced. You have to understand price action at a bit of a deeper level, right? You can't just see, a triangle and say, oh, that's a bull pennant or whatever. You have to think a little bit more deeply about what's actually going on in the given environment. The last example was a trading range. And this is obviously not a trend. And this is an environment where bulls and bears have an equivalent opportunity to make money. Bulls are looking to buy lows and bears are looking to sell the highs. And the important thing to note with a trading range is that there's generally a 50-50 probability that price either breaks to the upside or back to the downside. So we really don't know what direction price will continue moving, at least if we're seeing a trading range that looks like this. Like any example, price action and context is always important. So if, for example, we saw an uptrend like we probably did on, let's go back to our BE example, clear uptrend, I assume we've probably seen some kind of trading range activity somewhere along this chart. And this is just the hourly. So we have a pretty massive uptrend. And, maybe there's some kind of trading range. Let's see if we can define this more clearly. Maybe there's some kind of trading range, somewhere around here, maybe a trading range. Maybe there's a trading range somewhere around here. Maybe there's a trading range here, right? So there can still absolutely be trading ranges within an uptrend. And that's important to note, right? If we have a trading range that's in a larger uptrend, well, the probability is probably going to be a bit higher that it continues to the upside. But in general, when we're in a trading range, both bulls and bears have a good opportunity to make some money. And we can see that by bears selling the highs in trading ranges and bulls looking to buy the lows. And that's consistent in basically every single example of a trading range. So these are really our kind of my opinion on the most important patterns to understand in the market. And again, I can't stress this enough. I totally understand the fact that I've talked about this 3 to 4 times now. And I hope that really continues to drive the significance of these specific concepts home because I really think they're incredibly powerful and very simple to implement. And the reason why they can be so powerful is having this framework allows you as a trader to understand the context of a given environment. So for example, if we're in a trading range, you probably shouldn't be looking to trade a breakout, right? You should be more conservative with your entries and you should be looking to buy lows. Whereas if we're clearly in a breakout, well, you probably shouldn't be looking to buy or sell short. You probably shouldn't be looking for an opportunity to sell a bear flag or find some kind of short opportunity because in general, that's not going to be where the highest probability lies. Now, always there's opportunities to make money during breakouts, and there's certainly a time and place to be going short during a strong bull breakout, and vice versa. Certainly a time and place to be going long during a strong bear breakout. And that can be a little bit more nuanced and not something that we'll specifically cover as part of this lecture or even really the course series. Potentially we'll get to it in some of our later classes. But that's the big idea of this lecture on patterns. And some of the examples that we provided in our last lecture were some different regimes that NVIDIA has been trading in recently. So here on the left, very clear trading range, right? A lot of people probably were looking to buy maybe new highs here or new highs here, only to get absolutely smacked in the face. People probably weren't really buying much at the lows, at least what I'll call more retail investors probably weren't buying these lows and ultimately didn't get to make any money during this period. And same thing here, pretty clear, broad bear channel, right? You have to imagine this example inversed, pretty clear, broad bear channel. And it's important to recognize that change in environment. Here we have a pretty clear breakout, right? Gaps being left behind, bull bars closing near their highs. It's a very clear change in regime, right? We don't get this kind of price action when we're trading within some kind of bear trend. And then finally, very clear tight bull channel, right? We're seeing small pullbacks get bought, 1, 2, 3 bar pullbacks, all of them get bought. And some of you may have been looking, for example, again back here, to be buying at this specific spot, which obviously doesn't make sense because we're still within a trading range. Here, though, is where we actually got that confirmed break above the range. And in this specific example, I numbered some things so we have a bit more clear of a reference to talk about what's going on. Again, obviously in 1 to 2, we're seeing just failed breakouts of a trading range, going to be very common. 7, obviously we have a clear breakout above those prior highs. All things considered, there's absolutely no reason to be short after seeing a bar like that. You also have some rising buy volume as well. You have 2 gaps left behind, bull bars closing near their highs of increasing size. You got to imagine that bulls are taking a victory lap after seeing price action like this, right? There's really no short setup at item 7. And that's an important way to think about these kind of patterns, right? You have to understand, what are bears thinking? What are bulls thinking? What do bears want in this environment? And what do bulls want in this environment? And that's the last thing I'll talk about in this recap. So, for example, at item 1 and 2, bulls are obviously looking for a breakout to new highs. And in both places, they didn't get that. So obviously, bulls aren't going to be satisfied. 3, here we have a break to new lows with a bear bar closing near its low. Obviously, bears are going to be pretty happy with that. Same thing at item 4, right? We're seeing a lower low now set after a lower high, which is establishing that we're now in a bear trend. 5, here we see a break above prior highs. We're getting a nice sequential couple closes near their highs. Obviously, bulls are going to be happy about that, right? Bears would want that prior bull bar here to act as resistance, and now it's turning into support. So not a good thing there for bulls. On 6, bears would probably want to see some kind of failed breakout. So this, for example, might be a failed breakout here, or this may be a failed breakout here. Bears would probably want to see those failed breakouts set a lower low. And both cases, that was not the case, right? We had 2 failed breakouts, both of which were supported by bulls and ended up getting bought higher. Obviously, in item 7, right, bears wanted some kind of double or multiple top to hold as resistance, which didn't happen. And bulls actually got a new all-time high on rising volume with a bull bar closing near its high. Similar idea at 8, right? Bears would probably want to see some kind of follow through on this failed breakout, right? You have a nice gap up, close near its low. Doesn't look great. Bears would probably want to see new lows, but we're in that tight bull channel, so we can't get too excited about something like that. And ultimately, that pullback is bought and transitions into higher prices just a couple bars later. So this is a summary of all the conversations that we've had about this specific example. After today, you probably won't hear about it much from me anymore. But I wanted to just take the time to cover it once again, once and for all, and then we can get into support and resistance. So I'll open it up for any final questions on this topic, and then we'll do our piece on support and resistance. So Omar asks, you don't know if this is relevant, but can you estimate the pivot points with measured moves, and how do you find measured moves? That's a very interesting question. I'll take it. So measured moves, there can be a lot of different ways that people might say to calculate them. One of the ways that I'm most familiar with is by, for example, if you have some kind of trading range, we'll just go with this for now. The measured move for a breakout outside of this trading range would look something like this, where if you double it, that would be your expected move to the upside. And if you cut it in half, which is not really true exactly what I'm doing, that would be the expected move to the downside. And we could see in the case of downside, we didn't get that expected move. We didn't even get close. In the case of upside, obviously we got that expected move and ended up kind of acting as support to some point right around here. So that's one easy way to kind of figure out measured moves, for example. It's not something that I like to personally do too often. If I'm looking for maybe some expected move, I'm always going to be looking to prior pivots. So, for example, for something like TEM, which is on the verge of a larger breakout after this long-term IPO base, you're going to want to be looking to your obvious spots of resistance, right? 91.45 and 85. And maybe you call that a measured move, maybe you don't. But for example, for an example like this, your stop now has to be right around today's lows. So if you entered, right at close, this would be your risk. So for your measured move, you'd want to see at least 1 times your risk. Obviously, that would be on the low end. You would want to see ideally more than that. And continuing that further, we would get about 2x risk if we made it to this ultimate PT. If we were to enter at today's close, which maybe gives us a reason as to why we would have wanted to enter with a bit tighter of a stop, but with an average daily range of about 7%, a stop at today's lows actually is a little high, around 9%. So not super unreasonable, but maybe a bit higher than we would like. And just running through that same example with maybe another one of our leaders right now, Lemonade. For example, again, you could certainly have some kind of measured move. Like, for example, it's now dropped around this amount. So maybe the measured move after a breakout would look something like this. But again, for me, it's not something that I would particularly prescribe to. Instead of that, I would look to my first target, which for a name like this, you got to be looking right around the $60 spot. If your stop is below today's lows, around 49-ish, and you entered at the close, your risk is this amount, which translates to, let's see, around 5%, which is reasonable for a name like this. And then that would make our, I'll say, and this is more getting into measurement of risk to reward, but this now makes our reward around 3.5-ish times our risk, just doing rough back of the napkin calculations here, which makes that a pretty reasonable trade if we were to take something like this. And even makes it reasonable if we wanted to be a bit more patient to wait for a breakover, maybe 52.3. And you could perform the same line of analysis with plenty of names right now. But anyway, yeah, so that's kind of how I would go about thinking through something like this. Yeah, I guess the last way to think through measured moves is what I was talking about with Rob's earlier today. He brought up fibs. So for example, on a name like TEM that's nearly getting ready to bust through prior highs, you could start drawing some fibs. So for example, you could go from this swing high to the swing low, making yours some targets above all-time highs, 94.33. You obviously can't ignore this $100 spot. Obviously going to be a strong cycle there. And then maybe 105 is going to be the next spot to pay attention to. But anyway, that's my thoughts on that specific question. Any other questions before, any other questions before we move on to support resistance? And that was kind of a good, I'll say, warm up into that idea in general. Got it. Yeah, Albrook definitely loves to talk about measured moves. Yeah, I believe the trading range thing that I talked about is the main way that he implements the idea of a measured move. But to be honest with you, it's not something I'm incredibly familiar with as far as how he teaches.
Hey, is that relative strength indicator down there showing you the relative strength of the name you have up there, TEM, for example, in comparison to SPX or
That's
the S&P?
Yeah, that's correct. Yeah. So
Okay.
yeah, you can configure it to look at anything. I'm just going to make it look at SPX, but you could configure TEM versus the Qs. You could configure it maybe versus oops, for some reason that didn't work. I gotta go like this. Yeah, so you can configure it to, maybe look at the Qs. You could configure it to maybe look at some other, really strong leader, something like ALAB, which is going to be one of your true market leaders, and see it looks like this one's a bit weaker than that. Anyway.
Is that a script or is that something that's stock in TOS?
No, it's stock.
Okay,
Oh, I don't.
look into that. Thank you.
Yeah, you're welcome. I don't know why. Okay, I'm tripping. Yeah, fully built in. Yeah, it's just called the relative strength. It's a thinkorswim thing. Let's see. All it's doing is, ooh, okay. It looks like all it's doing is dividing. the closing price of yeah, it's just comparing the closing prices, I believe, and making that a ratio. So for some things, it's going to look, that's why it looks kind of horrible in some cases, because comparing to SPX, it's going to look in general pretty bad because it's such a high priced, um, I'll say high priced name in general. But anyway, yeah, I like it. I was just kind of messing with it this week a little more. All right. Yeah, so Joshua says, wouldn't retest, aka flipping resistance to support, be the best entries in terms of risk? Yeah, so Joshua, I 100% agree with you. Fundamentally, though, it does depend on like how you decide you want to take a position. Um, just kind of continuing on with a specific example, for a name like TEM, maybe you were looking to buy above these prior highs. You didn't get much of a retest outside of the same day. And there's going to be times when you don't get, a nice retest of support. Like, for example, it would be great if we got some action like this. It would be really clear, like, okay, we're clearly kind of flipping that resistance into support now. But in some cases, that's not what happens. And in my mind, when you get a name that looks like this, where it gaps above prior highs with this amount of strength and then flags out and really does nothing for a couple days, that's going to be a lot closer to an A plus setup in my mind, right? So it all depends on kind of what you're considering your risk in a trade like this. In my mind, when we see a name not fully retrace its move, that indicates to me that buyers are actually still incredibly strong, and there's not much presence of sellers. NVIDIA is a pretty solid example. It did come back and retest, but it didn't. Come on, I can't type the D. It did come back and retest, but it didn't spend more than really a single day at prior all-time highs. So retests are going to look very differently depending on the type of name you're involved with. Like for example, this one's a decent name that shows maybe a little bit more of a longer term retest. Like for example, LMND on the weekly, this one broke to prior highs 3 weeks ago, and now you could call it retesting this level for 3 weeks, which is going to make it a little bit of a weaker breakout. Obviously, ideally, we would want to see it continue very strongly through these levels, but to an extent, a name like this that's up, almost 300% in a year at one point, it's going to have to cool off. So not super unreasonable. But the answer to your question, Joshua, to keep it brief, is yes. Retests, in my opinion, are very ideal locations to be getting either long or short, depending on the type of retest. And typically, that's my preference to be purchasing retests rather than breakouts if possible. All right, very good. So back to the PowerPoint just really quick. I'll just give it 1 second. Is there any other questions on everything that we've covered so far before we move into support and resistance? I'm out of water today, Robs. I didn't fill up before the class, so I'm kind of pissed.
Well, don't get thirsty then.
I am, dude. I am. All right. So with that, we're going to just basically take it straight back to the charts. That's really going to be where a lot of this lecture is going to be best delivered. So with that, support and resistance is really an idea that I assume the majority of you are all very familiar with. We've talked a lot about key levels today in this lecture, and today isn't going to be a lecture about how to find support and resistance. It's not going to be a lecture about how to draw support and resistance or what exactly it means. What I want to focus on today is talk about some of what I find are the most significant or key levels of support and resistance. And the reason I want to do that is because we all know the basics, right? So I want to talk about different things that you might not typically be thinking about. And the first one that I want to focus on is support and resistance that comes from some kind of news event. And my favorite example to start from is the S&P. So the S&P just a couple months ago had basically a bear market at one point, right? We were really all the way down to that 20% correction threshold, didn't ever end up closing there, but things were pretty rough. And just to start off, the 10% and 20% correction thresholds are some of my favorite levels of support to watch out for in a bear market. And let me just clean this up a bit so we can see it more clearly. Or should I say a downtrend? So let's clean this up a bit. All right. So Now, looking at this example, we can look at it a little bit more clearly. You have these orange and red levels clearly marked out here. Orange represents 10% off of all-time highs. So that would represent a 10% correction. 20% would represent a bear market, which is 20% off all-time highs. And the reason I like to mark these levels out is because, first of all, they drive headlines, right? When you're in that 10% threshold, that is a technical correction, right? That is the official dictionary definition of a market correction. And a 20% pullback is the official dictionary definition of a bear market. So when we hit those levels, it's going to start to drive some amount of uncertainty, some amount of fear, right? Same idea goes when we started to get some of these -5, -6% days. All of a sudden, you have people talking about limit downs, right? That limit down circuit breaker is at 7% and 10% and 13%. Out of the woodwork, right? People start talking about these very negative ideas and very bearish and fearful sorts of concepts, which is reasonable, right? The market was moving significantly lower. But regardless of that, I love these levels, and I have found them to be incredibly useful ever since I learned about them. The first time I learned about them was actually all the way back in 2022, which really wasn't that long ago. But I picked this up from something that River actually taught me. And let's just kind of take this example once again for a ride. And approximately prior all-time highs are right around 480. So let's just calculate that out real quick. So 480 times 0.9 brings us to right around 432, which we have that level marked out right here. And 480 times 0.8 brings us to right around 384, which we don't have marked out. So let's just get that on here and let's make it exact. Again, just rough. It's not going to be perfect, but it's going to be close. And notice how these levels act as significant areas of support and resistance, right? Here, for example, it happened to line up with these prior lows as well, but 432 is that correction threshold right here, right? Very, very key of a level, right? 5 days we spent basically bouncing off that spot. Here, once again, once that level turned into resistance, we really never came back to it except right around here, basically a top tick. And that bear market threshold, right? The first time we came and touched that, we got a real significant buy. And then ultimately, once we broke through that, set a lower high, things weren't looking too great. And we can continue to see how that same level acted as support. So long story short, right, I wanted to just introduce the fact that these levels are incredibly significant. And we can see how significant they were just recently, right? You can see exactly how they played out once again. This is not something that I, came back and did after, but I made these levels once I realized that we were in some kind of more significant pullback. So that's the first thing that I wanted to mention is these kind of more correction or bear market related levels. The second thing that I wanted to mention related to this news topic as a whole, and you can see, I guess, on this prior chart, we can see some of the more significant events here. So here we have a couple of significant events. This is where Trump announced what I called tariff on the world. And this day specifically is where world tariffs were paused for 90 days. Now, I've talked about this idea before in our earlier lectures on bear markets, if any of you were able to make it out. But in general, the reason that this matters is a bear market is always going to start for some kind of fundamental issue, right? In 2020, it was obviously COVID and economic and financial concerns. In 2022, it was interest rate concerns and recession fears and inflation fears. In 2025, it was tariff concerns, right? And in every single case in both recent history and all throughout the past, a bear market never ends until the fundamental reason it began starts to show some kind of improvement. And thinking back to our most recent bear market, it began due to tariffs, right? Tariffs had a significant potential impact on the global economy. When we see those tariffs get implemented, the price of goods increases, companies are making less profit, and obviously that's going to make a big hit on earnings. And then consumers will be spending less, right? Because the price of things will go up a little bit. So people have to cut back. So as a result, the only reason the market should react positively in any case is when we start to get some improvement on that fundamental issue, which again is tariffs. And on this specific day, right, April 9th, this was a day where we heard that tariffs were going to be paused for 90 days. So what I did is marked the high of this day. Just mark that high out because this is a massively important day. This is the day where the fundamental reason the bear market began started to show some real tangible signs of improvement, right? Investors had a real reason to stop being as worried and as fearful as they had been. Additionally, the cherry on top is that this was one of the greenest days in market history ever. I believe the Qs did around 12% and the S&P did around 10%. That was probably the best day ever for the S&P, and I think the second best day for the Qs. Never been seen before, right? It's
Probably
never
never
something.
seen again either.
Well, I'd never say never, but you never know, Rob. I mean, yeah, fundamentally,
$60 green candle on SPY, bro.
yeah, it had never been seen before, and who knows? Maybe it'll never be seen again. So a move of that magnitude is significant without any news. Obviously, it wouldn't happen without news, but it's significant by itself. And the reason the move happened is also incredibly significant. So all I did is mark the high of that bar. And I should still have that level on my chart, just how important it was. Right around 547. It's not perfect. Mark the high on that bar. And this isn't a case of support, resistance, silly things like that, even though they do apply, right? This is where investors closed a day where they saw the fundamental reason the bear market was beginning to show some improvement, right? This is where investors closed the day out and said, we're happy with the amount of SPY that we've bought on this day. We're happy with the price of SPY. We bought enough for today, right? It really is a reflection of human psychology. This specific level is a reflection of investor sentiment on the overall market, right? Once we start to see price begin to creep above that level, whether you understand anything about fundamentals outside of the fact that the bear market began because of tariffs and it started to end due to easing tariffs, you should be able to recognize the fact that once price starts to creep up above that level, we're seeing overall improvement in the confidence of investors in financial markets, right? And this is because we're speaking about the S&P. Obviously, if we were looking at an individual name, it wouldn't reflect the entire market as a whole. But when we're looking at the S&P and we see price begin to close back above this prior high and hold above that prior high, that is reflecting an increased amount of confidence in the market, right? This is very, very key. And this takes support and resistance to a whole new level, right? Because now we're not just looking, for this example or for this level to turn into resistance or be support or reject or hold or breakout or whatever, but it's actually a reflection of the thoughts of investors and the feelings of investors in real time. And the one important thing to remember is that people like you and I aren't the ones that cause these sorts of moves in marketplaces, right? We're not. Right? We're a drop in the bucket, if that. We're not even really in the bucket. We're rain in the clouds that may fall and may not, just some mist. The people who are making price move in this manner and the institutions and funds that are making price move in this manner are managing billions upon trillions of dollars as a collective group. And as a result, when we see their confidence begin to creep up, when we see price beginning to hold over those prior highs, where previously that was peak, I'll say, euphoria in a given day. And now it's just another day in the market, right? Once we start to hold that level of support, no big deal, right? This was peak max euphoria, right? We've never seen investors as excited as they were on this day before, right? People have never been this eager to buy the S&P. And maybe that's not entirely true, but let's just say top three, right? Top 3 days people ever wanted to buy the S&P and the overall market ever in the history of the world. And then we spend a couple days above that level. And all of a sudden, it's not that big of a deal anymore, right? We've processed the fact that, hey, things are looking good, right? Tariffs are showing signs of easing. It's looking like the administration is going to give us a break here. And this was the beginning of the end of the bear market. Once price began to creep back above that level, you all know what happened next, right? And it didn't require you to buy at the very low at 480. It didn't even require you to buy another pullback, right? All it took was realizing the fact that this was a big day in news, right? No matter what you spin it. And the fact that we started to creep back above that level, again, the close of a day like this is always going to matter. It's always going to matter. And the fact that we started creeping back above that level and moving higher is so fascinating and so interesting. And this is absolutely an example that you can continue to carry with you throughout your time in financial markets. Because while this specific example may not happen again, right, we may not get another 10, 12% day on the S&P and on the Qs, we're going to get significant news, whether it's on individual assets or on ETFs, right? We get individual news that's significant quarterly, right? Think about an earnings report. Think about a name like Tesla that recently reported. Oh, I'm wrong. Didn't recently report. I don't know why I thought they reported like last week or something. That was silly. It was CRWD. CRWD, a name that can't type. CRWD is a name that recently reported, right? And let's just take a look at something. Look at the after hours price action on CRWD. There's a couple interesting things to be mindful of. The first one that I want to note is the high after the earnings report, 419. 419. This was the highest price that CrowdStrike hit after its earnings report was released. This is the exact same idea as the example that we just saw, right? While it doesn't reflect amazing news for the entire market, CRWD's earnings pre-call were perceived as relatively poor, right? Price moved lower. So that means investors weren't a big fan of earnings initially. But something on the conference call changed that perception, which caused price to move around $40, I'll say $30 higher in the after hours. And take a look how this level came back to haunt us. On this day, we didn't quite get a retest of this level. We were about $1 short of retesting that level. But it's very interesting to see us pop through that spot and come back and revisit it. And I'm just curious, honestly, at this point. I'm very interested to see if we did retest this on a very small scale. I just want to look at the 1 minute.
I bet you if you run a fib on that candle, it'll be sitting there at the 50% or the 61.8. Right
Your
there at
favorite,
that.
Rob. So let's see. Yep, there you go. There's your fib.
I
You
love
win.
it, man.
You love the fibs. Anyway, I had to get that out of the way. Very interestingly, look at today's highs, right? And really the high occurred in pre-market, but look what happened. We came right back to that spot and stayed below it the rest of the day. So this isn't going to be your conventional levels of support and resistance, right? We're not looking at multiple touches of a single spot. We're not looking at, a very clear rejection point, but we're thinking about support and resistance in a bit of a different way, right? We're connecting support and resistance to an emotional reaction that humans are showing us on the chart, right? Because fundamentally, price on a chart is just a reflection of human psychology, right? When price goes up, that means humans are happy, they feel good, they want to buy. When price is going lower, that means humans are worried, anxious, scared, not happy, whatever it might mean, right? That's all it is. And this was peak, I'll say, happiness for this name. And I guarantee you, if price makes it down to 387, well, I shouldn't ever say guarantee because nothing's ever certain in the market, but we'll say I'm highly confident that if price makes it down to this 387 spot, we'll probably see some other reaction, right? Maybe it's a significant bounce. Maybe it's not, right? Maybe it's a 1 bar bounce on the 5 minute and that's it. And that's the end of it. Point being, this isn't going to be your typical support and resistance levels that you might look for now, but these are things that are a bit more curious, I'll say, right? They require a little bit more thinking and understanding why these levels might matter. And again, those are just two examples. So that was the S&P on tariff news, and this was CrowdStrike on earnings. But these sorts of examples happen all the time. Another interesting one would probably be NVIDIA on the DeepSeek news, right? When DeepSeek was released, I believe that was here. I really should have it marked on my chart. I'll double check that later. I really should have it marked clearly on the chart, but I believe this was the day where the Chinese DeepSeek AI was released, and they had claimed to train it on, X amount of millions of GPUs when millions of dollars in NVIDIA GPUs when other firms are spending billions on top of the line NVIDIA GPUs. DeepSeek did it with, their crappier, cheaper ones. And this same level ended up being significant. And the interesting piece about this was the high after the DeepSeek day, or very close to it. I could probably refine that a bit better. Interesting piece about this one is that it also corresponded with prior lows and ended up being a very significant level in the future as well. So again, that's three examples that I was able to just pull up off the top of my head. These sorts of things are going to continue to happen and have happened a lot recently. It's been a very news driven market, especially over the last 6 months. It's going to continue to be that way with the significant emerging trends that we have in, for example, nuclear energy, small modular reactors, AI, both infrastructure, software, security. There's plenty of emerging trends and plenty of very unique themes out there, quantum computing, that are all going to be very reactive to news such as this. And it'll be very fascinating to see how they continue to react to levels in the same manner that we've described today. So, anyway, that's my rant on news levels. I plan on talking about more than just news, but that actually took longer than I thought it was going to. So I'll take a quick pause. Any questions or thoughts on that? Is that new to anybody? Is this all things that we all know, and I'm just reminding you of things that you've already heard before? Is this new information to those?
Hey, do you think after like a news event, like let's say you know that on Spy that $60 green candle,
Uh-huh.
for example, you think in the future, like after that, now that level is affected more by like algorithms of the institutions and whatnot? Like you know what I mean?
In terms of like where that level lives?
Right.
Oh yeah, I mean, 100%, Rob's like fundamentally,
Like if
even
they're
a
taking
couple.
note of that level, the big guys are taking notes of those same things, and they.
Sure. And yeah, I mean, to your point on algorithms, maybe setting those levels are the ones that are, I'll say, making the decisions on what levels price closes at. Algorithms are still programmed by humans, right? AI is
Right.
still trained by human data. So no matter how you flip the coin, um, there's still going to be the impact of human psychology littered throughout financial markets. Um, so whether it was 70% of trading, well, that's not a weather thing. The last I looked into it, 70% of trading was done by computerized systems, and that was about a couple of years ago. I assume that number has only increased, probably up to 80 to 90% now. And even adding on top of that, right? I mean, the best funds, things like Citadel, they're trading fully off of quantitative data. So, I mean, I don't even know who's doing the trading at that point, if people are making decisions or if it's really just computer programs. Anyway, that's neither here nor there. Fundamentally, trading, while it may be executed by computer programs, AI in the future, whatever you want to call it, there's always going to be that human impact, right, Robs? Because the news is still all related to things in our world. There's always going to be fear and greed in markets, right? And
And
that still
people.
continue to be true no matter what the news is about. And as far as I'm concerned, I don't really see that changing. Now, I'm no visionary, so I've been wrong plenty of times before. I probably could be wrong again on this, but I make the argument that until AI, if this ever happens, generally replaces, I'll say the majority of us in our careers and day-to-day jobs, I wouldn't expect any of that to change personally.
Hmm. Makes sense, man. Humans write the algorithm code, so it's you know what I mean.
Right, right. And human data is what's training AI, right? And that's the problem is sometimes when AI trains itself or gets trained on other AI generated content, it can start to create a feedback loop there. So yeah, I mean, fundamentally it's all still humans, no matter which way you look at it. But that could change, right? Certainly could. Um, like I said, I'm not a visionary. So I just
And
I
come
just
on.
know what's going on today and know what might be going on in a couple weeks and months and years. But outside of that, I don't know what the hell could happen, and I don't care to figure it out.
Same goes for the crypto markets, right? You think
Um,
they're out? You think they're in there? I mean, I know because there's not really regulatory clarity yet, and they're probably not entirely involved, but they are probably doing something.
yeah, crypto's hard for me personally to think about just because crypto is such a unique space in the sense that I feel like a lot more retail involvement than
I'm gonna say
stocks.
like a few years ago, um, I feel like it was more driven by actual traders and people, because
Yeah,
but now you got
yeah,
big boys hopping in and
yeah. I mean,
BlackRock
that's
over here buying up all the Bitcoin and then selling it all.
right.
buying it all.
that's the difference between then and now, right? 5 years ago, there was maybe a handful of institutions with some kind of sizable investment in crypto. And now, every sizable institution has some kind of Bitcoin ETF or Bitcoin or Ethereum on their balance sheet. So
Right.
to that extent, things have fundamentally changed. Um, yeah, all I know about crypto, because I don't personally trade crypto very much at all, actually, is that it trades very technical. Um,
It
it's a
does. I was
very
just about to say I'm over here charting some stuff up right now on BitUnix, and it's just the same thing.
there's no yeah,
Levels,
there's
the
no
levels that
fundamentals to it. That
you
I think that's the difference is that there's no real fundamentals to a lot of cryptos. Like, a
right.
lot of those crypto coins make the argument that, oh, there's this utility and blah blah blah. But if we're being honest with ourselves, that none of that really matters. Like in this day and age, no bank is using a crypto coin as their method for transmitting money, and maybe they will in the future, and that crypto specifically pumps. But in my opinion, and I'm maybe more anti than some people, but I just don't see the utility in most of those crypto coins. Certainly can be great investment vehicles. There's no denying that.
Oh, there's
But
like thousands of them, and I'm thinking maybe when it does have some kind of utility, there'll probably be like 10 of them that actually matter.
right, right,
Yeah.
exactly. There's however many thousand or 100,000 crypto coins and meme coins, and yeah, the majority of them are going to be continue to be useless. And I don't know. I know some have some interesting things. Like Solana is useful for the NFTs and the meme coins and stuff. I guess within crypto. But and maybe I'm just ignorant, and this is a bit of a side topic, but I personally don't use any kind of crypto in my daily life, for transactions or anything like that. And again, maybe that's just due to my own ignorance. But to me, that in
No,
itself,
most
like,
people don't, and I mean, realistically, I don't think any businesses really. Some businesses are starting to take payments in certain cryptos, but not not
yeah,
and not any and all crypto. So
right. So who knows, right? Who knows how that might change? But in my eyes, the way the government likes to work, there's no way that they're gonna allow some sort of currency that they can't track very well become the go-to for payment in this day and age. Um,
Yo,
yeah.
Toasty,
Hello, Norman.
what about Nebius, bro?
Nebius is an interesting one. Yeah, that's probably somewhere on my list here. Yeah, here you go. Yeah, it's a beautiful name. You already know that though.
but what do they do?
I don't know. Ask Norman. I don't know what they do. Some kind of
Norman,
AI
what?
infrastructure. Yeah, there you go. Clusters. Yeah. Yeah, nobody really knows what they do, but there's AI in the name, so
Oh,
gotta buy it.
when AI was popping, dude, anything with AI in the name was ripping.
Right. That was like BBAI. I remember when that
Got a
one
scan,
IPO'd.
yeah, dude. I got a scanner that I have on my Thinkorswim, and then just all these names with AI in it, or that had something to do with AI, were like popping up in the pre-market, ripping hundreds of percents and shit. And I was just going, "Holy crap!"
Yep. You gotta love it. All right, we got a couple more questions. Let's see. Joshua says, how can we use this concept to trade on a micro level and would it be as effective like for day trades? Yeah, so fundamentally, Joshua, just like any support and resistance, levels that we find from, I'll say, a more advanced thinking mindset certainly are still applicable to intraday. So I would still recommend, in general, finding levels of support and resistance from the higher time frames, but those levels can be employed and used on the lower time frames, no problem, right? Because levels from the higher time frames are always going to matter more than what's on the lower time frames. The one other piece that I wanted to say, which was the other type of levels that I wanted to discuss today, were actually more intraday focused that are actually derived from intraday price action. Um, and let's just toss something on really quick.
They changed me when I started charting on like the weekly and the daily. I learned that from River, and I never looked back, bro. I don't even get levels from. I mean, I'll take levels from a 4 hour chart, but that's probably about it. I don't get levels from anything lower than that.
Yeah, I mean that's my favorite idea as well personally. But some examples of some intraday levels are always going to be, your pre-market high, your pre-market low.
Yeah,
Let me see. I used to have another one of these.
I got scripts that chart all the pre-market high and lows for me every day, so it's always on my chart.
Yep, yeah,
Um,
something like this where like you should never really have to chart any of these manually. Like for example, this one here, it looks like it does pre-market high, previous day's close, previous day's low.
Yeah, I had Chat GPT write me those scripts, man, and they came out clean. I had to
Oh
alter
yeah,
it on my
it
own,
doesn't.
but
Yeah, 100% doesn't take much. And I was actually using ChatGPT to write scripts this weekend. It did pretty well. What did it write me? I forget.
I like the
It wrote
4 hour because it includes pre-market and after-hour sessions, so you can get something that you know what I asked. I actually I tagged River in Trade Floor, and I don't think he saw it, but I was asking him. Maybe you can answer this. What what all-time high matters more? Because I noticed on SPY the all-time high on the 4 hour chart is different because of the aftermarket hours.
right.
The daily, like what is the true all-time high? You know what I'm saying?
My, I don't know if you'll find this in a textbook anywhere. What I've always done is the all-time high during market hours. So I've never looked at an all-time high during after hours because in my mind, that's not real.
Okay.
Because it's not when the market's actually trading. So I've always gone based off when the market's actually open.
Okay.
Um,
I mark
and
them both, and I always write on. You know how you can write on the your level what it is. I always write like
yeah,
after hour all time high, and then daily.
yeah.
You know that way I know which one it is when I'm seeing it on my 15-minute chart. You know.
No, that completely makes sense to me. Yeah, if you find that the both work just fine, that's great. I never look at the after hours personally, but that's just my own opinion.
You
Anyway,
do more swing trading, right? Like that's more your.
right, right, yeah. So after hours and pre-market really, I really couldn't care too much what goes on in either of those sessions,
Yo,
which probably
Toasty,
is part of it. What?
since you're a good swing trader, bro. What do you think about Shop, the 142 strike? Shopify.
Yeah, this one for some reason hasn't been on any of my scans recently, I don't think. Um, yeah, this one's not coming up for me, but let's see.
Does that name typically have wide spreads on their options?
I don't think so, but I don't trade the options on this, I
I
don't
bet
think.
that like I kind of try to stay away from widespread options these days because
It should
I
be
remember
bad. I mean, volume's decent.
I remember the first time I bought I think it was in I think I bought an option on an Occidental Petroleum. And as soon as I
Hmm.
bought it, I'm like, why am I down $20 already? And it's because I had a fucking $20 spread. You know?
Yeah,
What the hell?
that'll happen to the best of us.
So I
No,
stick to
Norman.
like Bank of America and SoFi and stuff like that now. They got tight spreads. So
Yeah. No, shop doesn't seem that bad. Yeah, it looks pretty good, Norman. I like it. I like this undercut here today that it had. A lot of names kind of look like this today, where it had this kind of undercut of support, close with a bull bar near its high. Uh,
Starbucks
I
today.
I think it looks good, honestly, Norman. I like it.
Yeah, it was that one in Celestica too. Damn, that thing trades like a beauty, bro. Like either uptrend or downtrend on Celestica. Just beautiful, bro.
Yeah, that's a hot one.
Hey, Norman, where are you finding these names, bro? I know
His
Shopify.
imagination.
Never heard of this one.
Yeah, Celestica, I've been following it since
Damn, bro, you're in Sereno
60.
Valley?
Yeah. Dude, Dexcom is so huge, bro. They got like I think it's as big as Qualcomm, bro.
Bro, I know where that mall's at.
Yeah. Dude, last time I told you to meet me at that chicken place to the left, you didn't come.
I don't want to
That
see you,
fried
bro.
chicken?
I don't got my gun on me. Nah, I'm
Calm
just
down,
playing.
calm down, MMA.
Nah, I'm just playing. Yeah, I'll link up with you. Are you down here right now, Norman?
Yeah,
All
I'm
right.
about to go fill up Staples and another company, Loomis. Uh,
Tell me the next time you come down. I'll see what's good with you.
yeah, we'll keep in touch, brother.
All right. All right. Enough about me and you. Shut up now. All right. Anyway, this lecture has gotten real sidetracked towards the end here. Avenger says, "What's the blue line?" Honestly, Avenger, I don't even know what I've been pulling up at this point. I've just been pulling up a bunch of different indicators, and I assume you're probably talking about this. Was it this? This ADR thing? That, oh, this is what I was trying to show Rob's. Yeah, ChatGPT made this for me this last weekend, and you can go in and get it to make it and make your own customizations to it, and it's like perfect. Like it even says it adds this. It's got all these comments. I had to add a couple things myself to just make it what I want, but it's pretty good.
And I did the previous day's levels for my script. The only thing I had to do is I had, how you can go in there and change the line type. I had to change the line to like the um, how do I explain it? I don't know if you
The
go into
dotted or whatever, the dash
yeah,
or
because
yeah.
what was happening is like after the day would close, the freaking previous day level line would like shoot down and then change. So
Oh
I
yeah,
got it to where it's like not it doesn't do that. So the chart it keeps it looking more clean. Like it only shows the level during the day, like the actual open hours now. It doesn't show
yeah.
pre-market.
Yeah, ChatGPT is very good in ThinkScript. I've noticed it got better. It used to be like a couple, maybe even like last year, I was trying it and it sucked. Like it couldn't do anything. Now I had it work for me this weekend and it crushed for me. So I like it a lot.
Yeah, just
Yo,
prompt it what you want and then see what happens.
you guys want to know something funny? Yo, I was
What's
driving
funny?
around, bro, and you know how Hollow Logic is right here up the street?
No.
So behind Hollow Logic, bro, there's a Google building. So I was driving through there, and there was like a few people that I saw with a shirt called it said Gemini, bro. And I think their IPO is dropping soon, bro.
Gemini?
Yeah.
Yeah.
Well, Grizzly has actually said in his tab, if you notice, that he's hopping on that IPO, like for sure.
So Google, you think is going to divest Gemini or split it off?
Yeah, I think in the after hours, it literally popped like 10%.
Well, that wasn't because of that,
Google popped because they got the court ruling on their
right?
monopoly and whatnot. They came out on top in that case.
Yeah. So let's see.
Oh, really? I thought it was because of the new IPO.
Yeah. So
No,
they
they
don't have
don't
to
have
sell
they
its Chrome.
yeah, they're allowed to keep Chrome now or whatever. There was some kind of conflict of interest apparently, and the judge ruled in Google's favor. So
But they can't pay to be the exclusive search engine.
That's
Um,
funny. They
yeah, that's
paid him
pretty
out,
funny.
huh? Half a billion?
I don't know. Yeah, they probably paid him.
Yep.
Let's see.
Yo, have you ever traded O'Reilly's, Toasty?
No.
It did a stock split. They're usually in the Netflix fights. That one, Celsius, DraftKings, Meta. They're usually on the sponsorships. Fastly, your all-time favorite.
All right, Norman. I need to answer this last question, then we need to wrap up. All right, Joshua says, what are we looking at? These are the top three things on my watch list: A-Lab, Lemonade, and TEM. Those are the main things that I'm looking at. But this is kind of my master watch list today. So all these are in general fascinating to me. There was one that I also found kind of interesting, but it's a weird one, Cabo. Maybe you can look into this, Norman, and let me know what you think.
Oz baby.
Cable One, yeah. So this one was pretty interesting. If you look at the weekly, it is so beat up. I mean, it's destroyed, but volume's starting to pop off a little bit, and putting
Gap on
in,
Haley that hasn't been filled yet.
yeah. I mean, it looks like hell. I mean, this name looks like shit, but
Yeah,
it's kind of bottoming out a little bit. I don't know. It's interesting.
yeah. I've never even heard of this name. I'm like, I just look at
Yeah,
the
me neither.
look over and it's trading in like the hundreds. I was like, what the fuck?
Yeah,
What
yeah. This one looks good too, Norman.
Yo, you seeing the A firm, bro? It's in a gap right now. It's
Yes, I did
freaking
see A firm recently.
crazy, bro.
Yeah, they didn't like that breakout though.
Yeah, I think it's a retest here, or would you wait for the 81 mark at A firm?
Oh no, dude. I don't know if I would be super fired up to catch it yet. I'd be interested to see how it reacts around 80, honestly. This isn't for me, this isn't something that I can buy right now. Can it, bounce right back up for sure? But for me, I need to see some kind of more cleanly defined setup. And it doesn't have that right now. So for me, I personally wouldn't touch it, but I have my own opinion and my own things that I like to trade and don't like to trade. So anyway.
Yeah. All right, thanks.
All right, well, I think that's going to do it for me, guys. This ended up turning out to be a little bit more fun of a lecture than I expected it to be. So I appreciate the fun conversations, and I'm happy that we got to talk about sport and resistance maybe in a little bit of a different way. And let's just review what we have in our next couple lectures before.
Page is about the community too, you know.
That's right.
Yo, Toasty, before at the last slide, can you check Roblox?
Yeah, we'll check Roblox in just a second. So next lecture is going to be talking about more focus on multiple time frames. Then we have moving average systems. We'll talk a lot about EMAs in that one. Risk management will be a big one. Then we'll talk trading psychology, hoping to get a guest feature in for that one. And then the last two are going to be putting all the concepts from today together. So with that, that's basically going to do it. We'll look at Roblox for Norman really quick. So let's do that. Yeah,
Dude,
that's what it's on a
if you
6.
go on Roblox, bro. I haven't looked at that name in a couple of years, but
Yeah,
back
this
in
is crazy.
2020, last year, I want to say, if you chart last year out, you can see the whole year it ranged. Like it was hardly ever breaking over $47, $48. And I just like hammered shorts on that or some puts on that name, and made a good chunk of money, and then I never looked at it again. And look at it now.
Yeah,
Shit.
I was so funny enough. Roblox 3-ish years ago was one of the things that I lost. One of the largest amounts of money I've ever lost on a single trade. I actually lost it on Roblox. I think I got long right around here. And when it started to break that spot again, I started to make jokes with River because he knew that I was taking the loss, or I did take the loss at that time. And I was like, oh, I'm gonna hit it again. I'm gonna full port it, all this. And shit, I shouldn't have been joking because I would have been able to get my redemption, dude. I mean, it's
No
crazy what it's
way,
done this
bro.
year. Dude,
You
yeah,
would have like
I lost a
could have
lot of
10x it,
money.
bro.
I
That
lost a
thing,
lot of
that
money
thing
on
was
Roblox.
basically giving away money, dude. If you just traded that range and just shorted the like all last year, actually, if you switch to the weekly and you just go back like 3 years, it pretty much ranged for 3 years almost.
Yep, that is a very beautiful base, and I wish I didn't give up on it because it would have been a
That's
great
like a
life for me.
Robin Hood. That's like a Robin Hood trade right there.
Yep, Robinhood, Palantir, even Carvana, pretty similar. Yep.
We'll talk about Carvana.
All right,
$3 to 300. Oh,
I know. All right, everybody. I appreciate your time tonight. Thank you so much for your participation, conversations. That was great.
Sure, thank you.
And I will see you all in the next one.
All right, later, brother.
yeah,
See you, everybody.